Most people who want to buy Bitcoin have the same problem. They don't know if right now is a good time or a terrible time. So they either buy when the price is surging because they're afraid of missing out, panic when it drops, or they sit on the sidelines forever, waiting for a moment that feels safe. And that moment never comes. Here's the thing, Bitcoin has a measurable trend. There are models to tell you when it's cheap relative to that trend, when it's expensive, and when it's somewhere in the middle. And once you understand them, you stop guessing. You start building a position based on data. I'm David, and I help professionals and retirees secure their financial future with Bitcoin. I spent years at the world's largest Bitcoin security company before going all in on this mission. In this video, I'm going to show you three things: the long-term model that reveals Bitcoin's price channel and where you are inside it right now, the confirmation signals to tell you when to turn up your buying, and how to put it all together into a simple accumulation system you can follow without watching charts all day. Let's get into it. When people say Bitcoin is volatile, what they really mean is they have no framework for what Bitcoin should be worth. If you don't know what cheap looks like, every price feels like a guess. But what if there was a model that's tracked Bitcoin's price across its entire history? Every crash, every rally, every cycle, and it's never been wrong. It's called the power law, and the simplest way to understand it is this: Bitcoin goes up over time, but the rate of growth is slowing down. Not crashing, slowing. The way a city grows, fast at first, then more gradually as it matures. When you plot Bitcoin's price on this model, something remarkable appears: a channel. The model draws a trend line through Bitcoin's price history, and from that line it derives an upper bound and a lower bound. Bitcoin's entire price history fits inside this channel. Every single cycle, every crash, every peak. Look at 2022. Bitcoin dropped from 69,000 to 15,000. Headlines said it was dead, but on the power law channel, the price had simply moved from the top of the channel to the bottom. It was exactly where the model said deep value would be. Anyone who bought in that zone, following the data, not the headlines, turned 15,000 into nearly 100,000 in 2 years. This is your first tool. The channel tells you the big picture, where Bitcoin is relative to its own long-term trend. And that trend points up. Over 15 years, it's never stopped rising. It just decelerates gradually, the way any maturing network does. But the price can go up in a straight line. People take profits, markets overshoot, so the price bounces between the top and bottom of the channel. And right now, relative to where this trend points over the next 5 to 10 years, Bitcoin is still early. But within the cycle, it can absolutely be temporarily overvalued. The channel shows you which one you're dealing with. And that changes everything about how you buy, because now you're not guessing. You're reading a map. But the channel alone isn't enough. You want confirmation, and that's where the next set of tools comes in. The power law gives you the big picture, but it's a wide channel. How do you know when you're actually in the sweet spot, the zone where the odds are most in your favor? This is where a lot of people lose their nerve. They see Bitcoin drop 20 or 30% and think it must be cheap. But cheaper than last month and actually undervalued are not the same thing. Think of it like a traffic light. The power law channel is the road. It shows you the direction, but you still need a signal that tells you when conditions are green and when they're red. And that signal comes from two models. And they both measure the same thing. Is Bitcoin currently cheap or expensive relative to its own history? The first is called MVRV, market value to realized value. Think of it as a mood ring for Bitcoin holders, one of those rings that changes color based on how you're feeling. It compares the current price to the average price everyone actually paid for their coins. When this ratio is high, it means the average holder is sitting on big profits. Everyone's happy, and that's exactly when they start selling. The light turns red. When the ratio is low, it means the average holder is barely breaking even or losing money. Nobody wants to sell at a loss, so the selling dries up and the light turns green. In late 2022, this ratio dropped below 1. The average holder was underwater. Fear was everywhere. That was a green light. Within months, Bitcoin began one of the strongest rallies in its history. The second is the 200-week moving average. Think of it as Bitcoin's foundation. It takes the average price over the last 4 years and draws a line. In every major bear market, 2015, 2018, 2020, 2022, Bitcoin's price came down and landed on this foundation. It has never crashed through and stayed below for a long time. When the price touches the foundation, the light turns green. But here's the key insight. When both of these signals agree with the power law channel, when you're in the lower band of the channel and the MVRV says holders are underwater, and the price is near its 4-year foundation, you don't have one green light, you have three. Three independent models all pointing in the same direction. That kind of convergence is rare, and historically, every time it's happened, the forward returns over the following 1 to 3 years have been enormous. So where are we right now? When I recorded this video, the power law channel had Bitcoin in the lower half. MVRV was compressed, and the price was well within range of the 200-week foundation. You can check these models yourself. I'll put links in the description, but the point is you now know how to read the traffic light, and you don't need me to tell you what color it is. Now, I know what you might be thinking. This sounds like trading. It's not. There's a critical difference between trading and what I'm describing. Trading means trying to buy the exact bottom and sell the exact top. That's a fool's game. Nobody does it consistently. What I'm describing is an accumulation strategy, a system for building a position over time, with the intelligence to buy more aggressively when the data says conditions are favorable. In January 2024, Bitcoin was sitting around $40,000. Someone I know said they would buy when it dropped to 30. They wanted the perfect entry. But Bitcoin never went back to 30. It went to 70. Then 100. Then 126. They are still waiting. Meanwhile, someone who just bought $100 a week starting that same January, no analysis, no timing, just consistency, built a position at an average cost well below where Bitcoin trades today. But here's where the system makes it even better. In January 2024, the traffic light was green. The channel, the MVRV, the foundation, all favorable. Someone using this framework wouldn't have just bought 100 a week, they'd have doubled or tripled it. Not because of a gut feeling, because the data said lean in. And when the models flash red, when you're in the upper channel, the MVRV is high and the price is far above the foundation, you do the opposite. You don't sell, you just slow down. Pull back to your baseline and let the market cool off. This is the difference between investing and gambling. A gambler makes decisions based on feelings, fear, greed, and FOMO. An investor makes decisions based on a framework. And you now have a framework. And here's the part that gives you peace of mind. You don't need to watch charts. You don't need to check the price every day. You check in once a month, look at where you are in the channel, glance at the confirmation signals, and adjust your buying accordingly. That's it. The models don't tell you exactly where the bottom is. Nobody can. But they tell you the zone, and being in the right zone consistently over multiple years, that's how wealth is built. If you want to know whenever the traffic light shifts, when the models move from green to red or back, I send those signals to my mailing list members. Totally free, links in the description, and subscribe if you aren't already. Now, one thing I didn't cover in this video is the long-term math, where this channel actually points over the next 5 to 10 years, and what even a small position could mean for your portfolio. I break down those numbers in this video right here.